Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hello and welcome to the State of Economy podcast. I'm your host Jyoti Banthia, and today we'll talk about the upcoming trends in the fintech industry. The fintech sector in India recorded a 68% surge in funding in the July to September quarter of calendar year 2023 compared to last year, according to market intelligence platform Traxel. Overall, India is the third largest startup ecosystem globally, with nearly 1 lakh startups right behind US and China. We have Shilpa Ahluwalia, partner at Shardul Amarchand Mangaldas, and Sanjay Jain, partner at Bharat Innovation Fund, to talk more about the sector. My first question goes to both of them. What are the trends that you have observed in the fintech sector in the last 1 or 2 years?
Thanks, Jyoti. And I think that was a great introduction. India is really a leader, a global innovator in the fintech space. So everyone's watching what's happening here. Let me talk about 4 or 5 things that we've seen, in the last 18 to 24 months. I think one trend that has cut across all fintech products is really very sophisticated tools linked to data analytics and AI. We're seeing more and more firms using tools to understand customer behavior, understand their digital footprints, analyze data to be able to customize financial products and solutions. And this is something we've seen across payments, digital lending. And this trend has also led to the real growth in digital lending or alternate credit, as it's also known, which is effectively the use of alternate data sets to understand and underwrite credit risk when giving, and most of these are small value loans. And what this has done, it has really transformed, I think, the credit space in India, because credit access has now opened up to sectors, the SME, the MSME, the smaller entrepreneurs, retail, consumer, small value loans. All of these spaces are sectors that did not traditionally have access to bank finance. The new tools, I think, have really opened up credit access. The other two, I think, is one is, of course, the central bank digital currency, or the CBDC. India is one of the first countries to announce that it's going to adopt not just a wholesale digital currency is something that's used only between financial institutions, but also a retail currency, which means that you and I could access and use the digital rupee to make payments. So that's, I think, a big trend we've seen. And I think finally we're seeing the growth of RegTech, which is technology platforms helping fintech players understand and navigate the regulatory space as we're moving to a more and more licensed regime in fintech. And we've also seen the growth and launch of a few ID tech platforms helping platforms and consumers in identity management.
So, Shilpa, that is a great way to describe it. So, where we sit from at Bharat Innovation Fund, we have two pools of capital, one of which focuses on inclusion and the other on innovation. And we have seen both of these trends play out in this sector. From an inclusion perspective, we have seen the last 5-6 years, the growth of digitization has led to a lot of formalization and the creation of data about people who are new to the formal sectors of economy. And this data has now started to help people get access to the right financial product, as Shilpa just described, which then, actually all of this starts from the startups who are looking at this and saying, hey, here's a new market opening up. And how do we address this? Do we have enough data? Can we go find the right customers? Do we have the right products? And all of that innovation is now starting to grow and is really, finding its feet, and some scale is starting to develop. Very early days yet, but still, you're seeing these green shoots happen. And on the other side is the innovation angle, where, again, you're starting to look at all this data and saying, how do we make sense of it? How do we use it to drive growth? How do we get the right customers? And both of these are playing out together very beautifully in this space in India.
Absolutely. I think the growth in the fintech sector has been phenomenal, especially with new users coming in and fintech sectors, companies trying to evolve into a more inclusive space. So here is my next question on the basis of that. Platforms nowadays are not just providing probably a service, but they're providing multiple services to its users. So is this the new trend that we'll notice in probably in most of the fintech companies, where they will be starting probably with a product and then keep on adding more product because they want to be a one-stop solution for all things money for all its users?
So this really comes down to the cost structure in this business, right? If you take a look at what these companies do, they spend a fair amount of capital to try and acquire a customer. And once you've found the customer, you want to get more and more products to them, because that's the only way you can actually get a good unit economics going. So this is really what happens, is that you sort of say, I'm going to offer a product or service. Once it catches on and you get a sizable number of users, you start to bring more products that those users need. And this allows you to leverage the customer acquisition cost. And then you start to keep on growing it as per your customers' needs. And that really is one sort of trend you see. The other trend actually comes much more from the open banking perspective, where you sort of look at a customer and say, here's this customer that has traditionally not been served well, because the same products everywhere just doesn't make sense. So, for example, MSMEs need different things from their banks. So do women businesses, so do children, so do senior citizens. And perhaps we can provide a complete suite of financial products for this user, better than what the traditional institutions can. And these are really large segments in India, and it's really possible to build the right suite of products for them. This should give us better customer satisfaction, retention, and growth. All of this is happening with the neobanks that you're seeing, where they're sort of going out and saying, how do we get to this new type of customer and serve them better? Both of these trends are playing out. Very early days, I would again caution, but I think we are going to see a much better world for our users because of both these trends playing out.
I think, Sanjay, absolutely, I fully agree with you. I think that's that's something we've seen as well. And I think going back to what you said, I think stepping back to how what triggered the fintech boom in India, it was effectively, I think, payments was the first was the first point of contact, digital payments for a consumer. And I think what ended up happening was payment platforms found themselves onboarding consumers for payment products. And I think payment platforms have the ability, just in terms of numbers, because everyone makes multiple payment transactions a day, but not everyone needs a loan or an insurance product. So payment platforms found themselves with, I think, two key things. One is a wide customer base, and the second is a lot of data on these customers in terms of their digital behavior and online footprint. And those are both very valuable things. And I think, like Sanjay said, the cost structure, because of regulations and various other caps, the margins on payment products is limited. And what platforms found themselves doing is using that data to understand consumers and layering on other financial products onto what was traditionally a payments platform. So whether it's lending, whether it's insurance or investments, all of these can be layered onto the same distribution channel. And one interesting, I think, outcome from a regulatory perspective that has emerged is, while the distribution channel may be the same, each of these products very often come under different sectoral regulators. So you suddenly have a single distribution channel with payments and insurance and investments. So you have SEBI and IRDA and RBI all looking at a same distribution channel. So I think there is challenges that are associated with this, but the sector there's a lot of innovation, and we're definitely seeing more and more layering of customized solutions onto a single distribution channel.
Okay. Given that the funding in the sector has really surged, especially when we look at the Q3 of this calendar year with a 68% surge, what would be the funding situations, especially for fintechs, looking like in the next 18 months?
So Jyoti, I'm going to talk about the kinds of funding that we're seeing, and maybe the lens that investors now look at when approaching the sector, and I'm sure Sanjay can layer on to that. So we're seeing investors now focus much more on corporate governance. That's become a key when taking funding decisions. That's definitely a focus area. The second is when you're looking at investors funding a fintech platform, there's also now talk of not just growth, but also profitability and the path to profitability. And because the fintech space is evolving from a what I like to call a light touch regulatory environment to a much more regulated licensing framework, the costs of operation have also increased, the regulatory costs, the compliance costs, a result of which we're seeing consolidation, the larger players looking to acquire some of the smaller players. So the kind of funding we're seeing is also to fund some of this M&A activity in the fintech space as we're seeing more and more consolidation. But I think that the funding is definitely going to continue to increase. Like I said, the investor lens may have changed a little bit, but I don't see that being rolled back. And I'm sure Sanjay has thoughts around that.
Sure. Thanks, Shilpa, for that. Shilpa, that's a very good way to put it. But what also points to is the fact that investors have some dry powder which they're looking to deploy. They are looking at companies that are likely to be profitable, that have good governance in place, that have good unit economics. And also because there has been, for some time, a little drop in funding, there's probably very good acquisition opportunities out there as well. So all of this, has led us to this situation where we have seen this recent jump in the funding situation in one quarter. However, I do want to caution that a lot of this money that came in was actually much fewer deals. It was large checks written for slightly later stage companies. And that, again, illustrates the point that we are looking at players who have matured, who have got the regulatory compliances in place, who have got the governance in place, and who are at this point going to use that capital to expand in a profitable manner and find this path to profitability.
Profitability seems to be one of the key things that I think will drive the funding in the sector. However, the sector, like as Shilpa pointed out in the previous answer, that from being a light touched regulatory sector, it has now been heavily being regulated, especially by the RBI, whether it's the FLTG norms or trying to innovate into new products like UPI, credit lines, and things like that. So, Shilpa, here's a question for you right now. The sector is now going to be very, very cautiously regulated because it is something that earlier the bigger players had more moat into it. Now fintechs have come in and have changed the game of it. So do you think the regulators are also being very cautious in terms of how the space has to evolve? Because it is the money of the people that have to be protected in the larger sense of it. So do you think regulators are now going to be much more keenly observing as to what is happening in the space?
Jyoti, you touched upon something really critical, and that is, retail money and consumer protection. I think these definitely are our key focus areas of the regulator, because a lot of the fintech access point and consumer base is the retail consumer. So there definitely has been movement from a broad supervisory framework to much more regulation and licensing. In fact, just 2 days ago, the RBI released a framework saying now all payment aggregators that do cross-border for payment facilitation now need a license. So yes, this is a trend we've been seeing for the last couple of years. And Jyoti, I'd like to say that to really understand regulation in the fintech space, you don't need to know what the law is today, but you really need to try and have a sense of what it's going to be tomorrow, because it's so dynamic. And there is a lot of regulatory catch up, because very often the product innovation comes first and then the regulation follows. So we're seeing a constant change of the regulatory framework. One area where is a real a focus area, and I think it's one of the toughest areas to regulate, particularly for this sector, is data. And we have a new freshly minted data legislation, which was much needed, because what ended up happening is without the overall framework, the sectoral regulators had to step in and come up with regulations for each product. Now we have a framework. I think the real challenge will be to find the right balance in data protection, where we don't cut off data supply to fintech platforms, because that really is the source of innovation, but equally we protect consumers, and we're aware of the risks around data privacy and data leakages. So that's going to be a fine balance to really achieve. The two other areas I think where we can look forward to some regulatory change or supervision is one is digital banking. There has been talk of the need to have a separate framework for neobanks or digital banks, which is effectively branchless banking. That's one. And the other is, I know there's been a lot of conversation around cryptocurrency and regulating the private crypto ecosystem. I think the Indian regulators have indicated they've now moved away from trying to enforce a complete ban to regulation. So that's another area where we can look forward to a framework.
So Shilpa's got, I think, a lot of the things right. Broadly, regulators come in a little reactionary manner, right? Because if you think about it, when things start out, they typically start out, in an area where the regulator has not necessarily sort of defined the space. And regulators want to let that happen, right? Because clearly you won't get new products, you won't get innovation if you don't let that happen. Yet the moment the size goes up, either in terms of number of users or the total amount of money flowing through there, or the potential for customers to lose money, or investors, if it's retail investors, to lose money, becomes high, that's when regulators, the moment it starts to become slightly large is when the regulator starts to step in. And they have done this very effectively through the various sandboxes that have been created. So RBI has set up these regulatory sandboxes where they look at certain spaces and they invite companies to come in and do whatever they do under the observation of the RBI, which then allows the regulator to understand the space better, to start to define the rules around regulation for that space, and then bring them out. And we have seen this happen continuously over the last 2 to 3 years. RBI has a sandbox, so does SEBI. So that is one mechanism. What we would have liked to see, and I was on a RBI committee a few years ago, is something called proportional regulation, where you say if you're a small company, the total harm you can do to customers is much smaller and you should have lighter touch regulation. But the moment you start to grow, either in terms of users or the money you handle, you should have more stringent regulation. That's something we don't have yet as a framework in India, but that's something which I think we will need to build if we want to have much more innovation in the space. Because finally, you should be only as much controlled as the potential risk that you can cause to the systemic risk that you can cause to the ecosystem. And so that's something we would like to see. But that's, I think, something that the RBI and other regulators have not yet done. And they've gone with the same regulation, whether you're small or large. And that then leads to licensing requirements for some of these new spaces to come up. Now, on the other hand, with the data protection bill coming up, I think that's been a interesting journey so far on data protection. And I think finally the bill is in place. And what it looks like is that customer consent for data is going to be key. And over the next few months, we will expect to see the rules being formed under that bill, which will then help companies define how they do it. But I think it's good for us to have those protections in place where customers' data is protected and given under the control of the customer himself. And that really, I think, will help us get to a much safer path to where we can bring in people and they can use these systems and be safe about it. And at the same time, companies will be able to innovate, because if a customer wants a certain service, then they will have to share the data that is relevant to that service alone and not anything else. And as a result of that, we will have better controls in place. Now, one other factor which I don't think we have addressed is things that go across regulatory boundaries. So, for example, if you are providing a complete financial suite to users, which includes, say, a savings account, a investment account, lending, and payments. All of these have very different regulatory requirements and sometimes even different regulators. And so being able to provide users with these services that span regulatory boundaries is, I think, going to be an interesting space in the near future, because people think about their money in one holistic way. They don't think that this activity I'm doing looks at SEBI and this looks at RBI, and as a result, I will have to go to different providers for it. And that, I think, is something which we still need a lot of work on the regulatory space for that coordination to work much better. So overall, I think that our regulators are being agile. They're following the market trends and stepping in where necessary. But I think there's still a lot more to go in terms of both either proportional regulation or cross-regulator coordination.
Okay. Shilpa, if I could please have closing thoughts from you.
I think just one in terms of regulation, I think taking off from what Sanjay said, I think more in the way we're moving. I mean, there's a lot of innovation, and I think that the regulation is keeping up with the innovation. And like I said, I think the key will be for regulators to find the balance between creating a safe space for consumers to interact, but equally allowing innovation. And I think we're doing very well on that front. We're going to continue to see a lot of innovation in fintech, and I think a real focus area for fintech platforms has really been what the product looks like for the consumer. So what the customer journey is like, the convenience of the consumer, that's really been a focus area. And I think that has really transformed the way consumers interact with money and financial services and products. And we're going to continue to see innovation. The central bank digital currency, the CBDC, is really going to, I think, once that's there have been several pilot projects, but once that's fully launched, I think we can see a lot of blockchain-based innovation layered onto that. And I think we can look forward to a very vibrant fintech ecosystem going ahead.
Thank you. Sanjay?
Sure. I think I'm very excited. This whole space, we're seeing a lot of innovation, a lot of customer centricity, both from the fintech side who are looking at users and finding the problems that need to be solved to fully bring them into society, to allow them the right products that they can use to make their lives better. And on the other hand, we see the regulators who are also looking to protect the customers, to make sure that they're safe in this journey, and hence, bringing in the right protection stages as they go by. And then finally, we have the investors who are saying that, hey, this is a growing space, and where can we put in the fuel to make it grow and make life better for all of us? So overall, I think we're in a very sweet spot right now, and I'm very excited by what we see.
Thank you so much for joining on to this podcast. I hope to see both of you in person sometime very soon. Thank you.
Likewise. Thanks, Pudi.
Thank you.
Thanks.
Bye.